Hi, and welcome to Dukascopy TV. My name is Elizabeth Kiyatsurayanon, and today alongside me is Jean-Francois Owczarczak. Hello, Jean-Francois, and welcome once again to the studio.
Hi, Elizabeth. Thanks for having me.
So there has been a lot of focus on the health of the Eurozone economy as well as the Euro-US dollar as it has been under pressure for a couple of months now. Do you think it will come to exhaustion?
Well, we've had quite a tremendous move. And so, I think it's worth asking the question today. And we'll do that by going into the charts. So we have our standard mosaic here that we use for this Dukascopy TV show. We have Euro-dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, S&P 3 months futures, and Treasury bond futures. Now let's look at the euro first. And so this is an investor's view. This is a longer term chart of the euro. It combines a weekly chart, a daily chart, and an hourly chart. It allows an investor to quickly understand how the different trends interplay. So you have a weekly trend, which is counted in quarters. You have a daily trend, which is counted in months. And you have an hourly trend, which is counted in weeks. Now we can see, following this correction up since mid-2012, the long-term trend, the weekly trend, has resumed its trend down. And now we have targets which do seem quite aggressive, but are counted over the next few quarters towards the high teens to almost 110. So quite a negative perspective on the euro-dollar for the next 3 to 4 quarters. Now if we go into the daily, this reversal was initiated earlier this spring. It has been heading down at quite a steady pace, quite a linear pace, all through spring and the summer. And we're slowly getting into the target zones here, which is now written impulsive done. The high end of this target zone was 131. The low end is around 128.65. So we're pretty much there. Now, the trend indication is still down, and there's still time in front of us. So this is no guarantee that the move is finished, but it does say that from a risk-reward perspective, it is getting closer to exhaustion. You could also see that both our envelopes are touching each other, and our risk index is well into the green. It hasn't reversed yet, but it's well into the green. Now, on an hourly basis, we're looking at impulsive 2 targets. These are the maximum targets that we'll calculate. Doesn't seem that they're quite finished yet. Last week, we were here saying we thought there was one last move down. It actually initiated. Is this last move down coming to an end? Well, there's probably still a bit more time to go. The risk index is not really an exaggeration, and we could make it down below 128 from what we see here. I wanted to take the opportunity today to try to get a more precise view and looking at the trader's view. So a trader's view is meant for traders which look at the screen maybe 2-3 times a day. Now we have a 60-minute chart which will give you your guidance over the next few days. And at the moment it's still heading down, still has time and pretty much the same targets as the hourly here. So we believe the move is not quite over yet, although we've seen early signs of exaggeration. The 15-minute chart gives you your perspective over the next day or so. And we see that we initiated a correction up here, which we did make it up to the lower level, hence the message here saying correction up done. Now as long as we stay below the higher level of this target range, this move is not turning impulsive. So it's only a correction, and it would sync well with what we have on the 60 minutes here. If we were to move above these corrective targets, which are just below 129, then we would be initiating a stronger move, which might cast doubt against the 60-minute chart. So maybe a good trading stop here, just below 129. And then the 4-minute chart is reacting up, also in only a correction, but more generally, we could say that it's still pretty much in the scope of the longer downtrend on the 60 minutes. I've been quite long on the euro-dollar. I'll try to be quicker on the other ones. And if we quickly go to cable, a lot of news last week with the Scottish vote, and we could see that cable was still heading up, but was in quite a strong exaggeration a few months back. And hence the intermediate correction that we see at the moment. In essence, the trend is still in the upward direction, but its target range is pretty much done, at least in terms of time. Now the correction down that was initiated did go through its corrective target and now is an impulsive move. And that impulsive move still shows potential in terms of price and in terms of time, which means that at the moment this is where I would focus my attention, on this move that is heading down. We might be getting towards an intermediate bottom, but if you see the reaction here has been quite strong. It did make it into impulsive territory, but I'm always a bit wary when within a relative tamed price move, the risk index flies into the red overbought. So I would be more cautious here in calling this strong impulsive targets. And maybe here also the trader's view can give us some help. So pretty much neutral on the 60 minutes. It's a bull, but there's no targets. And on the 15 minutes, you could also see this range here, which is the corrective target up. And it's not impulsive yet. And as long as we stay below 164.40, it will not turn impulsive up. So as long as that happens, I wouldn't be too bullish on cable. Now, I'll quickly fly through gold. Gold has been in a downtrend for the better part of 2 years. We, about a month and a half ago, reinitiated a resume a downtrend situation. And you could see there's still some price target and time target down, and probably somewhere between 1180 and 1120. And on the hourly, it's getting slowly exhausted, but there's still the possibility over the next few weeks to move below 1200. So I just wanted to flick to the S&P also. So the S&P has been in a long-term uptrend over the last 2 years. It's getting close to exhaustion here. But we think in our impulsive 2 targets maybe have still another 10% to do over the next few quarters. Now over the daily, it's getting quite exhausted, but there still has the potential to move above 2020 up to 2026. And the hourlies had been in a consolidation last week, but resumed their uptrend, and we believe that similar targets can be envisaged over the next few weeks.
Thank you for being here.
Thanks for having me.
And thank you for watching. Make sure you keep clicking back to Dukascopy TV for the latest updates. Goodbye for now.